Welcome to Crypto in America Live, the only show bringing you candid conversations on the biggest news stories, legal issues, and policy developments shaping the crypto world every Friday afternoon. What's up?
Happy Friday.
Happy Friday, guys.
Jacqueline, you look stunning.
Oh my gosh, thank you.
Your earrings
Yeah, you were like, where were you?
I'm glammed up. I have a wedding this weekend. I am in Cannes in the south of France. Me and Eleanor were in Paris, and it just so happened and so worked out that I had a wedding here afterwards. So yeah, I'm ready to go after this live stream. I've got somewhere to be. But Crypto in America comes first, always.
That is convenient. Crypto in America from Cannes.
Crypto in America from Paris. As you guys can see, we were on stage at the Proof of Talk conference this week at the Louvre, which was an insanely cool venue, right, Jacqueline?
Yeah, it was so beautiful. We were literally in rooms where like the walls had famous artwork on it. It was like a museum. Like there were certain areas that were like roped off. So you definitely don't want to fall over that. But it was really, really beautiful. And Eleanor did
don't touch
amazing
Mona
job.
Lisa. Yeah.
Yeah. We didn't see Mona Lisa. She wasn't around. But Eleanor did a great job emceeing. So kudos to her. It's a tough job to do that.
Thank you.
And take my hat off. Yeah.
You did a great job interviewing Stani from Ave and Jürgen from
Jorgen from Canton Foundation chairman. I was trying to think of like the proper title because
he's got two. He's head at Euroclear and he's also on the board of Canton. But yeah, it was a great conference. I think we should all three of us go next year and maybe do some live streaming from there, because I know you did the episode with the block, Jacqueline. I loved their setup. They had a really cool live setup. So that would be cool for us to do next year.
Yeah, Crypto America live.
Yes.
Live 2x.
Well, coming up on our live show this hour, we've got three guests. We have Ryan Rasmussen. He's head of research at Bitwise. And we have Gavin Zavatone. He is founder of the Defend Developers PAC that launched this week to support members of Congress in favor of legal protections for software developers. And we have Olta Andoni. She's the executive director of the Illinois Blockchain Association. We're talking about crypto taxes and the bill that just passed in Illinois that was really going to crack down hard on users of digital assets. Ryan, of course, is going to talk to us about the markets, which, let's start talking about that. Because I mean, it's a grim.
Do we have to? Could we just...
Painful. Maybe if we talk about it, it'll do the reverse.
There you go. Yeah, just good vibes.
Yeah.
Has that ever worked?
Back up. I don't think it's worked. But
I don't know. Whenever I buy, things go down. So maybe I should start, selling, then things will go back up. The inverse.
Yeah. Well, just a quick overview. Crypto is on its worst weekly performance in 2 years since July of 2024. Bitcoin's down 15%, Ether's off 17%, and we've got the lowest monthly spot trading in volume since October of 2023. So we'll get into all of this with Ryan in a little bit. We also had a Zcash blip, right, Gerald, with dropped, I think it's over like 45%. It's down 45% right now. There was a researcher that discovered an exploit for minting unlimited tokens. And then Arthur Hayes, who's like a big KOL, dumped his entire position. So that happened.
Yeah, it's, no offense to Arthur, maybe a bit of a paper hands moment there. So I do not hold Zcash. I did. And Paul Brigner, who runs the lab side of Zcash, is a good friend. So very, very interesting. Like the project, I think, made such a run up, right? It's basically just been hyperliquid in Zcash over the last like 2 or 3 months. And it's rough to see them have that kind of a drawdown. But I think the privacy narrative is still like developing. We could talk about like how this is impacted, if there's any like BRCA, like dev protection, like what are we doing in the privacy space as an industry? I think Zcash is well positioned to be part of that conversation. But yeah, it was like pretty frothy out there for a minute. So we'll see how it goes.
I'm pretty sure Arthur Hayes tweeted about a week ago or so, like hype to 140. And so some people are not very happy that he would say something like that. And then, in the preceding days say that he's going to sell all his hype. But I mean, it still had a very strong run up for what it's worth. I don't really do like price predictions. Obviously, I cover, token relations in that capacity, but definitely not my forte here. But I think in general, the sentiment at Proof of Talk in Paris was not necessarily that high. I think people were concerned with the market, and it's not, every conference where people bring up prices, but it was definitely like a topic of conversation. I don't know if you felt the same, Eleanor.
Yeah, topic of conversation, but I feel like because the conversations were focused more on like long-term outlook and what the convergence of TradFi and crypto is going to look like, it was much more of a, not policy focused by any means, but much more of a, steering away from like state of the market, I thought, but definitely the sort of the underlying like vibe was negative. Do you remember when we went to ETH Denver and it was like, and everyone was depressed? And I remember someone telling me that ETH Denver was kind of a bellwether for how the market is. Like if it's really good, most people are really happy and walking around and just like, super in a good mood. And if the market is not, then ETH Denver is pretty, it's low attendance and low mood. So definitely wasn't low mood at Proof of Talk, but you could feel that there was something off. We'll talk about Saylor too, but let's talk about that with Ryan. Let's move on to Clarity update. So 3 weeks until Congress breaks for July 4th. Cynthia Lummis told me that it's more likely the Clarity Act will see floor time when they return. So the week of July 13th. So then that puts us in the window of about 4 weeks before they break for the August recess. And let's roll the tape because I made a little bit of news with this one.
It's been 3 weeks since banking advanced its portion of the Clarity Act out of committee, and the White House has said that they would like to see this get done before the July 4th recess. Given all the competing priorities for floor time right now, do you see that as realistic?
I think it's possible, but maybe more likely we finish it before the August recess. We have a number of things to deal with. We have to wrap the banking committee bill with the Ag Committee's bill, with the ethics provisions, with some changes to the Genius Act, the bill that passed last year. And so to get all of those pushed into one bill and then get the 60 votes necessary for cloture on the floor of the Senate might take a little more time than the 4th of July, but we passed the Working Families Tax Cut bill last year in record time, so it's not impossible.
You heard it from the horse's mouth. So.
The rancher's mouth. Yeah.
Exactly.
I love, Senator Lummis has been such a passionate advocate for the industry. I think like her being realistic about these timelines, I appreciate it. And yeah, I mean, they have stuff to do. You heard like, we just have to do these 4 very hard things to get it done. So like, this is all, the checklist is narrowing, right? Like the list is getting shorter, but the timelines are now shifting. And we've talked before on the show about being optimistic about new deadlines. And so, I think like July 4th is probably, in her words, not realistic, but we have time.
I think we're talking about July 4th, right? Because the White House said they would like to see this done by July 4th and kind of set an unofficial deadline. But what I've been hearing so much lately from folks in the policy realm is that they set these deadlines as sort of like a focal point for people to say, okay, well, let's have people focus on this date. So we're hustling to get it done by this. Right. If we don't get it done by this date, it's not the end of the world, but deadlines aren't exactly the most meaningful thing in Congress, as we know.
Not set in stone, but it's definitely a good thing to work towards for sure.
Yeah. I mean, so long as they have time to be in session, and then it's got to go back to the House, and we should probably have Chair Hill on the Financial Services Committee to talk about how they're going to reconcile all that. But on the Senate side, it seems like they're moving, but they only have so much time, and so we'll see.
Yeah, and just to update our listeners, they did pass the reconciliation package through the Senate last night. They did a whole big vote-a-rama, so now that has to go to the House. It's going to go to the House next week, obviously, because everyone goes home today. And FISA is the next battle, but I'm hearing that there could be complications. Some are saying it's dead on arrival now because Trump put up Bill Pulte as the next DNI, basically to replace Tulsi Gabbard, and Democrats are not having that. And the CBDC provision is also causing some heartburn. So that FISA may not actually happen, but it's the next sort of hurdle to get over before the Senate turns to clarity. But also, you said, Gerald, right? The clarity is just not ready yet. It's not ready for the floor. There's a lot of kinks left to iron out. So again, with the timeline, we'll sit tight for the next couple of weeks and see what news comes out. But yeah, it'll be an interesting one as always.
Yeah, and I was surprised to see the well, not that it's like crypto in America related, but the Pulte thing. I think what's the saying? Like nose to spite your face. Like like it's that was a very challenging appointment. I think even not, you mentioned the Democratic side, I think even Republicans are going to have some challenges with that.
Yeah.
And there's an interesting, but yeah, we don't have to go down that rabbit hole, but there's a lot going on there.
Definitely a lot going on there. Just to quickly mention Pulte, just because he does kind of factor into one headline I want to get to before we get to Ryan, is Coinbase and an online mortgage lender called Better issued the first ever crypto-backed mortgage. It basically let two homeowners in Michigan put Bitcoin down as collateral against their down payment for their first home. And Pulte was the one who opened up that whole conversation last year when he said, the FHFA is going to start allowing crypto into the markets as a form of collateral. So this was the first time it ever happened. So kudos to Pulte.
Interesting.
Yeah.
I feel like we've seen Bitcoin collateral mortgages in the past, though, right? So maybe this is a bit different from that.
Yes. I mean, it's interesting. So all little financial disclosure here, as an angel investor in Better a long time ago. Very.
Oh, interesting.
Yeah.
Okay.
Very interested to see how this goes. I think what you want, like Jackie, you're right. We have seen like Figure. We had Mike on talking about this a while ago. There are other venues looking to use Bitcoin as collateral for a lot of different things. I think what makes this one particularly interesting is that like the institutions are starting to kind of come around to this idea. So having like Fannie Mae be involved here is like something that I think if you'd said this like 6 years ago, probably would have been like kind of a pipe dream. And so it's pretty interesting to see the institutional kind of the names that have been around for 200 years kind of come in and participate here is interesting.
Yeah. Yeah. All right. Well, with that, crypto is on track for its worst week since July 2024, as I said previously.
Thanks, Eleanor.
To remind you, just to twist the knife. Also, we had a jobs report this morning. It was stronger than expected, and that's signaling that potentially there's going to be no case for Fed rate cut the rest of the year. Potentially, maybe some hikes in the near future. Who knows? Also, the spot trading volume, as I mentioned, is at its lowest level since 2023. So basically, I think everybody wants to know, number one, what's going on really behind the scenes, and then kind of where do we go from here? So no one better to answer these questions than Bitwise's head of research, Ryan Rasmussen. Ryan, come on in. Welcome to Crypto in America.
Thanks for having me. Great to be here with y'all.
Great to have you on. So we've seen a ton of volatility over the last year, and I think since the October 10th liquidations. But in your view, is this just another kind of typical crypto sell-off, or are we seeing something fundamentally changing in the market right now?
It's a good question. I think there's nothing broken fundamentally in the market. When you zoom out and look at the long-term thesis for many crypto assets and networks, Bitcoin, Ethereum, Solana, Hyperliquid, nothing's broken there from what we're seeing. This is kind of standard of the late months of a crypto winter where you see large selling down of assets, a lot of volatility. You see sentiment way, way down, which I think this week it's probably bottomed out for this crypto winter, at least so far. So I don't think anything's fundamentally broken, but it's certainly tough times out there for crypto investors.
I mean, before you came on, we were talking about the kind of hype conversations and Zcash conversations going on crypto Twitter timeline. I'm sure you saw that too. And Arthur Hayes said he sold his. What's your take on that? Is it overhyped? No pun
well,
intended.
the vibes are definitely not hype right now on crypto Twitter. I think I logged into crypto Twitter perhaps yesterday morning and was just like, wow, people are down in the dumps right now. And so, look, it's not good when you have these exploits that have been live for several years in protocols like Zcash, and there's no way to prove whether or not it actually was exploited, right? That's bad technologically for the ecosystem. It's interesting that this is like one of the first examples of AI assisted research that found this type of a bug. And I think it's a good reminder that there's always technical risk when it comes to investing in new technologies and crypto that investors should price in. I think no one expects to see this level of risk and corresponding sell-off when they think about that for something like Zcash. And when it turns to Hyperliquid, right, like the fundamental story for Hyperliquid as this extremely high growth, new innovative technology that's emerged in this new era of crypto assets, that thesis is still intact. And if you liked Hyperliquid at 70, you should like it where it's at today, right? If you had high conviction in that asset, I don't think the story's fundamentally changed. It's still growing from a traction activity and revenue perspective significantly. It's still penetrating new markets. It's launching prediction markets. It's launching perps on traditional assets. All of those things remain intact. So vibes are down, but if you have a long-term thesis, and if Bitwise were long-term investors and you maintain conviction in these assets when the price is up, when the price draws back, that just creates an interesting opportunity to either lower your cost basis or add to your position.
Yeah, Ryan, speaking of AI, the AI trade is a big narrative right now. A lot of conversations around that. And a lot of people kind of pivoting their portfolios into that. Do you kind of see AI as like the new growth trade here that crypto once was? And how much of an impact could that have over the long term for crypto, if so?
Yes. So AI is definitely sucking air out of the room when it comes to crypto. You know, we spend a lot of time at Bitwise going to traditional conferences. These are like RIA summits or family office meetings or financial advisor meetings. And right now, they're all focused on AI. And that makes sense, right? The AI trade is ripping. If you turn on CNBC or Fox Business News or any mainstream media, financial media outlet, all they're talking about is how long could this AI rally last, or some AI stock is up 30% on the day, which typically doesn't happen in equities with big name stocks, right? That's a crypto thing. And so when financial advisors are seeing that and their clients are asking, hey, do we have exposure to this AI trend? It's easier for them to say, look, we're not talking about crypto right now. We're not thinking about crypto right now. I'm focused on this. And it's a more difficult decision for them to make to allocate to crypto when you have uncertainty around price action, when you see things like Bitcoin ETF outflows, when you're not sure if the Clarity Act is going to pass or not in the next 2 months. It's easier just to sit on the sideline and allocate to something like the AI trade or the Qs or something, that's index based that gives you that kind of exposure. So I do think it's sucking the air out of the room. You also have the SpaceX IPO, Anthropic, OpenAI. All of these things are top of mind for investors. Crypto is not top of mind for most investors right now. And I think you're seeing that reflected in the level of demand we're seeing from most traditional investors.
Yeah, Ryan, I want to ask you about that concept of like liquidity versus real things happening, right? So I'm at New York Tech Week this week. We, Say did an integration with MasterCard. So I was like oddly in like the MasterCard offices this week talking about payments and like real things happening on chain. There's been a lot of that sort of institutional adoption, like stable coins, all these types of things happening, but we're not seeing it reflected in price, right? Like there's a huge disconnect right now between what is actually happening sort of on the ground with the institutions. We had the big like kind of perps news come out in the CFTC the end of last week. There's a lot of interest in that and like regulated rails for licensed US exchanges. Like crypto is very much growing up in that way, but all the liquidity seems to be going to these AI trends, and the price is obviously going the opposite direction. How do you guys think about like reconciling that with not necessarily where we are today, but like 3 months down the road, 6 months down the road? Like, how do you guys kind of account for that?
Yeah, I think it's a really good observation in terms of, if you look back at crypto's history, price typically leads fundamentals significantly. Like if you look back 3, 5, 7 years ago, right, price was going parabolic, but the fundamental adoption of crypto or integration of crypto into the traditional financial ecosystem or traditional investors' portfolio was tiny, right? Today, if we zoom out, it's one of the first times in crypto's history, or at least one of the unique times in crypto's history, where fundamentals are significantly stronger than price. And what I mean by fundamentals are things like institutional adoption and positive regulatory momentum. Maybe not with the Clarity Act in this moment, but otherwise at the SEC, CFTC, we had the Genius Act last year. Right? These are positive regulatory tailwinds. That's a fundamental long-term catalyst. Integration of stable coins with the largest payment companies in the world, MasterCard, Visa, Stripe. I feel like I'm hearing an announcement every other week of some huge initiative at these companies. Sometimes they're teaming up to integrate stablecoins into their payment networks for the future. These are the kind of fundamental drivers of long-term growth in the crypto industry that you want to see. And 5 years ago, we would have been, begging for and jumping around the room doing cartwheels if we had one of these announcements. And so I think this is a sign that fundamentals are significantly further ahead of price. And so when you look out 3 to 6 to 12 months from now, it's difficult to forecast short-term price action in crypto. It's a volatile asset class. It's heavily momentum based. A lot of these assets, particularly outside of the top 10 or so, are very low liquidity relative to the amount of capital moving in and out of the space. That's why they move so much. And so it's hard to forecast the short-term price action. But when I step back and say, is it better to have Visa or MasterCard or Stripe or PayPal adopting stablecoins for the long term? Is that better for prices 10 years from now? Does that mean that crypto is going to be more of the financial mainstream 10 years from now? Or is that worse? I think it's better. And I think that leads to long-term growth in these networks and these assets. And there's a lot of other fundamental tailwinds as well that we believe are long-term catalysts. But, it's hard to see right now how that's going to play out over the next 3 months.
Right. In Paris, one of the key topics of conversation, I'd say I kept overhearing, was the Saylor sell-off. Literally, when I walked into the green room one day, that was just, someone was like, how are you doing during the Saylor sell-off? And I was like, I don't own crypto, so fine. But I got to ask you, is it, I think Saylor is actually kind of attributing some of this stuff to what we talked about earlier, like a lot of the AI trade, investors pivoting into AI. Obviously, what Saylor sold was a very small amount of Bitcoin in the overall, pot that he holds. But, him doing it now, does that, in your opinion, did that change sort of the psychology of the market? Do you think it shook investor confidence at all?
Well, I think you're exactly right. It's a tiny, tiny fraction of the Bitcoin that Saylor owns. And I think it's unique that he telegraphed it on the Q1 earnings
32.
call that it was
32.
Going to happen. And so you have this kind of shock in the market. I think you see that reflected in, of course, Strategy stock price. You see Stretch, their preferred offering, trading, I think, around 93 today, right, which is a significant discount. So I do think you see some of that reflected in the market. I don't think it's a fundamental issue for Strategy or even for some of these other offerings. We've seen time and time again this happen to Strategy stock. We've seen them hold Bitcoin at a loss for several months or years. Look, I wouldn't be surprised if he bought a little bit more Bitcoin just to kind of reinstill some confidence in the market. But people do see that. And Saylor's been a very high profile personality in crypto. And Wall Street Journal covered this sale, right, and kind of framed it as a U-turn in the first sale by, Bitcoin bull Saylor. What does this mean? And so I do think people see those headlines and they panic a bit. But I think long term, I'm not worried, and we're not worried at Bitwise about Strategy. I think there'll be net purchasers of Bitcoin for many years going forward, and that they'll find other unique ways to fund their liabilities. They could, write options income strategies on top of their Bitcoin. They could lend their Bitcoin. They'll find other unique capital products to raise capital to help pay down debt and whatnot. So I think this was a way to inoculate the market. It's obviously good that it happened because people were, reactive to it. But 32 Bitcoin is such a small amount in the broader scheme of things for what Saylor owns. I think we'll get through this and kind of look back on it as silly in 6 months that people cared.
Yeah. And I think it's like, to your point about the small amount of Bitcoin, I think one of the best tweets I saw was very hard to get $2.5 million and then lose like $8 billion or whatever in market cap. Like that's a really challenging trade-off. I think there was also something tied to the dividend that contributed to this. But my question for you is, you guys are obviously very sophisticated investors. You understand how to read through these public statements, how to understand the preferred sort of share classifications that these guys have. And a lot of the digital asset treasury companies are pretty sophisticated from like a corporate governance, and I'll just call it like a paperwork angle. How do you think about the retail response to this versus knowing that like there are convertible instruments there's like preferred share classes? Like, how are you guys thinking through, obviously retail has a very negative reaction, but to your point, it's still fundamentally sound. You see him as like a net purchaser going forward. Like what should our audience know about like the sophistication of these types of vehicles and how they should be thinking about that?
Yeah, I mean, I think first of all, most people misunderstand these products, right? And they are complex, and a lot of people don't sit around thinking about like preferred equity and preferred perpetual dividend, like things like that, right? So these are complex financial terms. A lot of the investors in these perhaps don't understand what they're getting into, but it's not abnormal for these types of offerings to trade at a discount and start pricing in market risk, right? So the price of Bitcoin starts to fall. That creates more risk in some investors' mind that strategy is going to struggle with their ability to fund this dividend, because in part how they might fund this dividend in the future is through Bitcoin sales, right? So the asset backing the dividend payments has fallen. So that's some risk, right? Beyond that, you also perhaps see that folks see the price falling of Stretch and they start to panic, like, oh, this was supposed to trade at 100. Like, what's happening? Saylor sold Bitcoin and that didn't help. Is it going to continue to go into this death spiral? But I think that's a function of people not understanding what they're getting into. I think it's just the market pricing in a little bit of risk here. And I imagine people will look back a year from now, and it'll probably take a lot less time than that, and view buying Stretch at 93 as a nice entry point. And that dividend, which is I think around 11.5% today, is a little bit higher if you buy it down here. And I think you'll see institutional investors who already have exposure to Stretch and understand Strategy's business model and understand the risks they're underwriting will likely use this as an opportunity to build their position and lower their cost basis. And so net, these are not products for the everyday retail investor. I think a lot more of the demand for these products should be coming from institutional investors, and you should know what you're getting into when you purchase these things. I think a lot of people in crypto have a tendency to just go all in on something because there's momentum or hype around it, for lack of a better word, without understanding the fundamental risks and drivers of that price action up or down. And I think this is a good example of people investing in it, not understanding the risks, seeing it sell down a little bit, or seeing Saylor sell a tiny little amount of Bitcoin and then panic selling the product that they bought.
Ryan, great explanations. We got to have you back on. This was awesome. Thank you so much for coming on today.
Would love to be back. Huge fan of the show, and have a great day.
Thanks.
Thanks,
too, Ryan.
I love when someone can explain market terminology to me just like so well. You know what I mean?
I just want to nerd out on preferred cap tables and SEC filings. I think we could do that for a while.
I think we're gonna have to launch your own show, Gerald. Where vertical of crypto in America, where you do that.
There you go.
Think that would be I think that would be a fan favorite. All right. Well, Washington is debating right now how to regulate crypto. But Illinois is moving ahead with a new tax on crypto, and it's pretty rough from what I've been hearing. The state lawmakers passed this digital asset privilege tax as part of their fiscal year 2027 budget. It's scheduled to take effect at the start of next year. And essentially, it would apply a 0.2% excise tax to crypto and other digital asset transactions sold to Illinois customers. Joining us now to break down what this means is Olta Andoni. She's the executive director of the Illinois Blockchain Association. Olta, welcome.
Thank you so much, guys. I wish I wasn't here on this note about this tax. I was on a better note, but I appreciate you having me on. I think, definitely this is one of those legislations, and I would call this personally a shell bill, because I think it's going to be quite impactful for the industry, and probably I think it will be beneficial for the listeners to know a little bit about the history of the bill and how this whole happened, because this was not a digital asset bill since day one. Actually, this started as an agricultural bill. So this bill was introduced, if I'm not mistaken, by Senator Patrick Joyce, and this was back in end of January, like January 29th or so. And then the original bill had absolutely nothing to do, as I said, with cryptocurrencies. It was just a minor amendment to the Illinois Finance Authority Act concerning agricultural borrowing rules. And then on I think was March 10 when the bill was assigned to the Senate Financial Institution Committee, and then that was passed, I think, on March 25th with a 10-0, pretty much, which at this point it was still a agricultural bill, finance bill, completely non-controversial. I think on April 14th, then the Senate passes the bill on third reading, I think was 55-0. And then the House assigns the bill to the Revenue and Financial Committee. On May 13th, then the House Revenue and Finance Committee passed the bill, I think was 18-0. And I think on May 31st is exactly when the gutting happened, sort of, because this is exactly when U.S. Representative Tarver, I think, that filed the House floor amendments 1 and 2, and those amendments are going to replace, they replace pretty much everything after this enacting clause. I think that at this point, the agricultural borrowing bill was completely replaced with the entire state budget package, which is ridiculous, including here the Digital Asset Privilege Act. I think there was also 10% targeted advertising services tax, was social media platform fee, et cetera, et cetera. But both these amendments were adopted, and then the House passed the bill, I think was 73, 41, and 4. And then June 1st is when I personally learned, because some of my friends reached out to me and they were like, oh, hey, do you know about this bill? And at that point, I think the Republican sponsors of the bill, they dropped out. They all removed the names, for a legit reason. And then the Senate concurred with both House floors amendment, I think was by a vote of 36, 19, and 4. And then the bill, passed both chambers. So I think that, I think the history I think the bill's history, I think, is potentially our strongest argument about the process abuse at this point, and that's what we're trying to fight, on behalf of members of association, but we also have a lot of businesses here in Illinois that would like to speak on behalf of them. But obviously we're going to come up with a strategy, but unfortunately I'm hearing that Governor Pritzker is about to sign the bill, and we are considering all potential ways how to stop this from happening.
So Olta, I would love to know, maybe for our listeners too, is like, what are the things that they should be paying attention to going forward, and what are the key next steps here?
Yeah, I think that Section 320, and I am on LinkedIn for people who would like to reach out to me. I think that Section 320 is quite impactful. And as far as, business categories that are going to be impacted, I think definitely cryptocurrency exchanges, because for Kraken, Coinbase, Gemini, Binance, etc., this is a 20 basis tax on full value of digital asset per transaction, and then pretty much every buy, sell, or trade or conversion is going to trigger the tax. Also, I think this is going to be a massive compliance burden for these exchanges. The other business categories that will be impacted, from my reading of the bill, of course, but I'm an attorney in the industry, so obviously we do the impact on different business categories. I think stablecoins providers are going to be impacted, because this is going to be again 20 basis points on full value of every stablecoin transaction. I think, pretty much if you have a 20,000, USDC purchase, you're going to have a $20 tax, which doesn't make much sense. Of course, for brokers and dealers, the Robinhood, eToro, Fidelity, any SEC registered broker is going to be impacted on this. Custodians as well, and they're going to have, of course, the same tax on the custody of storage alone triggers the tax, like storage of digital asset. I am not certain from the reading of the bill. I'm not certain myself how this is going. I think it's going to be impactful for DeFi protocols and DEXs, especially DEXs front ends, potentially any DeFi interface that is serving Illinois users, depending, on. But this goes back, I think, on the IRS definition of broker definition and how it's going to be applicable, to DeFi protocols. I feel like there is a little bit of legal uncertainty there that we need to analyze further. But mostly, I think this is going to impact, the retail investors, Illinois residents that are going to buy, sell, and transfer and hold digital asset through a broker. This is a tax that is going to be imposed actually on the privilege of receiving that digital asset, and of course, brokers are going to collect the 0.2% of the tax from customers on every single transaction. So we are trying our best to raise a lot of awareness about the impact of this bill, but it is unfortunate that we were not on the table. Illinois Blockchain Association has been very active, and we provided our comments regarding our former DAPCA bill, and thankfully the legislator here considered those comments, so that was a very positive push and positive feedback from them. But unfortunately, this time around, we're not on the table.
Olta, I want to ask you about kind of a fundamental irregularity is the wrong word, but there seems to be like a fundamental disconnect here, because when I think of Illinois and Chicago, it's the birthplace of the commodities industry, right? Like it's the place where futures and CME and everybody else like kind of got their footing. It's jump land now. Like it's, there's an enormous amount of market activity, particularly on like the derivatives and futures side, that runs through Chicago and runs through Illinois. And I know you and I have talked about this in the past, where every couple of years they seem to consider a bit license, and then like maybe it gets tabled a little bit, and then maybe they come back to it. What do you think? Like, obviously the governor and the leadership being in the political positions they are, like maybe that complicates things. But from a constituent perspective, it feels like if I was the home of the derivatives and futures industry, then I would want to be accommodating to those types of constituents, those types of businesses. What do you think they're missing here from the legislative side about who their market participants and their actual constituents are?
You nailed that. And I don't think they're missing anything here because, they know they have a lot of businesses here in Illinois. And yesterday, I was attending a breakfast event where Don Wilson, the founder of JRW, was speaking, and he made a great point. I think that the legislator, by adding this 20 basis point tax, especially overnight, truly is telling you to pack your bags and move. And unfortunately, I think, of course, we're going to try our best to keep the businesses here in Illinois, but I think that is the message that the legislator is giving here in Illinois. And unfortunately, we have never had, hopefully we're going to have the support, because I think there are some chances to kind of water down the tax implications, and we're considering the strategy on behalf of Illinois Blockchain Association and working with our lobbyists, but also that needs a lot of funding, and this is going to be a long way how to challenge this bill. But unfortunately, Gerald, I don't think that we are very well welcomed here in Illinois as a business, as a industry, not as a business.
Yeah, Olta, we saw the House Ways and Means Committee drop a couple of bill texts today, or draft discussions for some, provisions for digital asset tax reform. It's a topic of discussion that gets, we talk about it a little bit here on the show. It usually gets maybe pushed to the side a little bit in favor of the Clarity Act. Obviously, that's everybody's big priority right now. But if that passes, and then we move on to digital asset taxation, and something like the reforms that we're seeing on the federal level were to become law, would that change anything for the Illinois residents? Could it affect how the tax that's being suggested where you guys are is ultimately implemented?
Yeah, that's a great point, and I'm relying a lot, on that federal preemption, because I think that if the market structure happens, definitely that's going to give us, I don't know, a lot of more power to challenge this bill. But we both know that we are uncertain on the market structure, so I think the strategy now on behalf of Illinois Blockchain Association, I'm not saying that we're pretending that it's not going to happen, but I think we're just taking the worst case scenario. But I do have hope if market structure bill passes, then that the federal preemption argument is going to be super impactful to fight this bill.
Mm-hmm. I don't know if I can ask this, but I'm going to ask this anyways. Are you thinking of a specific date or deadline for market structure? I know earlier we were talking about Senator Lummis kind of floating that they were pushing for certain deadlines in early mid-July, right? But I don't know if you are optimistic or realistic on a certain deadline.
I have been an attorney in the industry, as Gerald knows, for many, many years, like very early 2014, 15. I do not believe in deadlines, and we have heard all the stories, and I respect Senator Lummis and especially what she does for our industry. So much power to her, and everything how we can support her. But unfortunately, these deadlines never worked for the benefit of the industry, and I'm not trying to be pessimistic, but of course, this is a very important bill. And I truly appreciate everything you all three do on this show to push the agendas in DC. And yeah, thank you very much for all of that.
Mm-hmm. Thank you, Olta. Just quickly, I wanted to reference the letter that you sent in partnership with the Digital Chamber. What are you hoping, if anything, comes from that letter?
Well, first, let me publicly thank, of course, I thank Cody. Cody has been, in Digital Chambers, a tremendous supporter. They reached out to us the first moment that they heard about the bill, and we published this unified letter. And I think that, just presenting, we're going to talk also with Stand With Crypto, and the associations that have reached out to us, which I really appreciate. But I think the support from all the industry associations is super important, and I truly value that at this moment.
Great.
Amazing. Well, Olta, thank you so much for coming on
today.
Thank
you for having me. Thank you.
Thanks,
Thank you all.
Good to see you.
Thank you. Bye.
Well, our final guest of the hour, we're going to talk about the new crypto PAC. It's focused on defending legal protections for software developers. And we're going to talk to the founder of that PAC. That is Gavin Zavatone. He is founder of Defend Developers PAC. He's also the policy lead at the DeFi Education Fund. Come on in, Gavin.
Hey guys, how are you?
Welcome.
How are you?
I'm doing good.
Good. Well, it's a big week for the topic in general, I think. You guys launched the PAC. Then there was also a fly-in of several, former law enforcement officials with the Blockchain Association. There was a town hall targeting some of those law enforcement officials, hopefully trying to get them more on board with some of the, protections for developers in the bill, and saying, okay, clarity is actually a good thing for law enforcement to be able to go after bad actors. But, we'll kind of get into all of that. But the PAC that you launched is the first PAC that's really been dedicated exclusively to protecting developers. Why do you think that nothing like this has been done before until now? And I know this is kind of your baby, so you can speak to this.
Well, thank you again for having me on. So Defend Developers PAC, as you said, is the first political action committee devoted exclusively to supporting software developers and crypto builders. So Defend Developers PAC is a hybrid PAC, which means that it can accept contributions directly from individuals. So we're seeking contributions from builders and crypto developers. And then also it can accept contributions directly from organizations. And really the mission here is to establish the political infrastructure that is lasting, to say that, developers are here to stay, crypto is here to stay, and we're trying to build lasting political infrastructure beyond any one election cycle, so that this industry has a political voice.
Mm-hmm. Gavin, I also read that there was a focus exclusively on incumbents, right? So what is kind of the goal there? Is it to kind of have like the greatest possible impact on the lawmakers currently negotiating the Clarity Act, or how do you kind of think about that?
Yeah, so I think the mission is more broad than just the Clarity Act. If you look at different industries and different innovations in the US, in order to stay, they often establish PACs very similar to this. So the mission is to establish this for like a multi-decade approach. But the reason why we're supporting incumbents is so that we can make sure that there is support for people that are actively standing up for developers in Congress and are championing kind of like the core ethos in the crypto community.
Yeah, Gavin, to that point, like obviously the BRCA has become a big issue, sort of post stablecoin, excuse me, with Clarity. And I want to know, one is, how are you feeling about the language as it sits right now? And then two is, if we do get it passed in like at least a relatively similar construct to what we have now, what's kind of the next focus for you guys?
Yeah, so putting on my hat as doing policy for DeFi Education Fund, which is a separate effort, as Defend Developers PAC is an unaffiliated PAC. The Clarity Act, the Blockchain Regulatory Certainty Act, Section 604, is probably the unifying issue for the entire crypto industry, because it's really fundamentally saying people that are building non-custodial technology should not be subjected to intermediary registration or criminal enforcement for merely building that neutral technology. And, before the Senate Banking Committee markup, there was a rule of construction inserted to the BRCA as a compromise between Senator Lummis and Chairman Grassley of the Senate Judiciary Committee that would preserve the authority to prosecute actors that are have the specific intent to move criminal proceeds on behalf of another person. Which is preserving the statute 1960 B1C. So that statute, is used to target people who are knowingly transmitting criminal proceeds. And I think that largely because the statute says, on behalf of another person, there is a little bit of strength for people that are building non-custodial technology, but it is a very notable concession for the industry. But as we move to the floor, now that we're out of committee, the most important thing is making sure that the protections in the BRCA remain strong and remain in the bill, because if we're going to establish a regulatory framework for the next century of digital assets, we need to protect people from inappropriate misclassification.
Gavin, am I right in remembering that 1960 B1C was the clause that was sort of the standout in the Roman Storm trial? That was actually the one that was not covered under the... Yeah, go ahead.
So Section 1960 B1C was added by the Patriot Act to target, certain people that were knowingly transmitting criminal proceeds. But if you're asking me what I believe, or, my boss, Amanda Tuminelli, who is, a criminal lawyer, Section 1960 was designed to be a statute to enforce failure to register under the BSA. It is not meant to be a weapon to be used to target developers of non-custodial software that are not required to register. So if, people have concerns about illicit finance, they can look to the money laundering statutes under Section 1956 or 1957, or things like wire fraud and sanctions evasion, not money transmission.
Yeah, and when you were talking, I just remembered that it was not covered in the Blanche memo. That's what I was trying to that specific section. So technically, that could still be a kind of fair game in the Storm case. But how much have you guys raised, or how much are you planning to raise? And then are there any specific races or lawmakers that you're already targeting?
Yeah, so Defend Developers PAC will be, championing crypto champions. So we'll be backing people across the country on the House and Senate that are actively pro-developers, pro-blockchain technology, and trying to look at the races where we can have the most impact. In terms of how much we're raising, we are a hybrid PAC, so we're raising from organizations and from individuals. The important thing to note is that when you're, raising money from individuals and making contributions from individuals, that is a different cost structure for a PAC than a super PAC that only does advertising. So we're looking to raise a lot of money, probably aiming for around 6 figures across a lot of key races across the country. But our numbers will come out at the next FEC filing deadline.
I'll be on the lookout.
Great legal answer there.
Yeah. I wanted to ask you as well, kind of about maybe the conversations you're having on the Hill right now. Do you find that they're starting to understand that the developer protection should be in place, or are they still kind of like wishy-washy on it, given kind of the precedent that we've had in the past?
Yeah, I think there are some members that really understand why building and developing crypto is the most important thing, because there can't be crypto without people building it.
Yeah.
But I think, there are some members that remain skeptical, and particularly for like illicit finance, law enforcement concerns. And I think the number one thing is going in and educating them about how the Clarity Act is a pro-law enforcement bill inherently. Title II and Title III of the bill, hundreds of pages that have been added since it passed the House last July that are devoted specifically to addressing law enforcement concerns on AML and CFT. So I think, educating them on that and continuing to, explain like there is no regulation for this industry right now. And we have a decision to make as a country and, as our elected officials as to whether, we want a regulatory framework or the status quo.
Yeah, actually, I was thinking that yesterday when I was listening to the town hall. I mean, members of that event kept talking about the status quo, right? Patrick Witt said, what we have in Clarity is materially better than what we would have if Clarity doesn't pass, or if we just kind of keep going with what we have. Why do you think law enforcement is so kind of, maybe what are the biggest concerns that they have really? I mean, is it the core issue is the 1960, unable to maybe prosecute bad actors? But it seems to me that it's kind of been, that issue specifically is being dealt with in Clarity as well. So are there outside issues that they're also unhappy with that you know of? I mean, it kind of seems like we're focusing on one issue, but the bill as a whole is kind of more, pro law enforcement, and they might be able to do a lot more than they could, today without the Clarity Act.
Yeah, I think there's kind of 2 buckets of concerns. The first bucket is, the law enforcement groups before the Senate Banking Committee markup had sent various letters with regard to the BRCA and the Section 1960 reference in the BRCA. But largely those concerns were addressed by Senator Grassley and Senator Lummis's compromise text that was added. So I think, it's very important to clarify that a lot of those concerns about bad actors were addressed with that compromise text. But I think it's really just education, which is always the issue that we encounter with people that are just learning about blockchain technology. It's not inherently controlled by one person or a group of persons. So, when you look at it that way, a lot of law enforcement people might say, okay, it's not controlled, so we need to figure out how to, target bad actors or something like that. And I think just educating them about all of the things that the Clarity Act will do for them has moved the needle significantly. Many of them were not even aware that all these provisions were in the bill. So we've seen a lot of positive movement there.
Yeah, Gavin, I really appreciate the perspective here. Congratulations on the launch of the PAC. I think it's obviously a really meaningful mission. What are some of the, we know that there's a decent chance now that the House likely flips. We'll see how it goes. We'll see where the Senate ends up. What are some of the key races that you guys are looking at and that maybe our audience should pay attention to going into the fall?
Yeah, so it's important to note that not all of the members that we'll be backing will be in cycle. Some of them will be in cycle, some of them will not. But I think it's very important to also, note that we're not sure what's going to happen in the fall. Everyone, pollsters and people in the industry have a lot of predictions. We saw in the last election that Polymarket accurately predicted the result of the election better than many pollsters. So, we are trying to engage in a bipartisan fashion. We haven't picked out any specific races yet, but we'll be trying to support people in the highest impact races. So I'll have to circle back with you on that.
We'll have to have you back. Yeah, we'll see how it goes. Yeah.
I just looked it up. Polymarket's odds of the Democrats winning the House is 82% right now. So
wow.
We will see. But Gavin, such a pleasure. Congrats on the launch, and we'll have you back on to chat when you have some more news to share.
Thank you guys so much for having me.
Thanks, Gavin.
Thanks, Gavin.
All right, guys. Lots going on this week. Yeah. Gerald, I didn't know you were in New York all week.
Yeah. We had an offsite in the New York Tech Week. Been bouncing around town all week. It's been.
I know you're at Tech Week. I just didn't realize you're doing the whole week.
Yeah. No, it's been the weather has been cooperating. I appreciate that. Thank you, New York, for being sunny.
For not raining.
We had a heat wave in Paris, but then the 2 days of the conference were like dreary and cold. So
yeah.
It's okay.
Awesome. Well,
all right, guys. Well, Jackie, enjoy your wedding celebrations, and we will see all of you guys same time, same place next week.
See you guys.
Thanks, guys.